Output CGST. Output CGST, output GST, that is GST collected on sale, right? So it is not an income for the seller because this amount what the seller has been collected from the customer, it should be submitted or deposited to the government later on. So whatever the output GST we are having at the time of sale, it's a liability for the business. And from the conventional point of view, it's the nature of this account is representative personal account representing the government. After setting off, government says the next point I have said, after setting off output, after setting off input GST against output GST, balance left in output GST is paid to the government as a tax authority. As just now I have explained you, government, the rule of government is whatever the GST you have paid at the time of purchase, you can recover it from the GST you have collected, and the balance amount you will send to the government or you will pay to the government or tax authority, right? So that is the this point says that after setting off input GST against output GST, balance left is in output GST is paid to the government or tax authority. Another point of importance is if the GST rate is 12% in case of sale within a state, it will be comprised 6% CGST plus 6% SGST. In case of outside state, it will be 12% IGST. So in other words, we can say that for intra-state, that is within a state sale, both CGST and SGST are charged at the half of the prescribed rate of GST. It means suppose GST rate is 10% and the transaction take place within the state. So we will charge 5% CGST and 5% SGST. GST, suppose GST is 10% and the transaction within the state. So CGST will be charged 5% and SGST will be charged 5%, right? This is the rule. We will use it while we are recording the transaction. So there are some important information. GST paid, that is inputs GST is reversed credited in the following cases. It is very clear when whatever the GST you have paid, when it will be reversed means credited. Simple, this is you have paid GST at the time of purchase of goods when you are returning those goods. So purchase return, at the time of purchase return, that input that amount of purchase return input input GST related to the purchase return will be credited. Goods taken by the proprietor. We have discussed the journal entry, drawing account debited to purchase. Definitely the purchase, while you have making purchase of goods, you have debited the input GST. If proprietor has withdrawn that goods, so goods you will credit the purchase and the same time that amount extent to that purchase input GST will be credited. Goods lost or stolen, goods destroyed or become not saleable or written off, goods distributed as free sample, goods distributed given away as a charity. In all the cases, if you are crediting the purchase, you will credit the purchase account. You know it. We have already discussed purchase account. In all the cases, you will credit the purchase account, right? So when you are crediting the purchase account, then definitely at the time of purchase, whatever the amount of GST you have paid, that will also be credited. So this is the point what I'm trying to explain you. GST paid is reversed or credited in following cases, right? Apart from another information is following goods and services are exempt from levy of GST or charge of GST. What are those goods and on which GST is not charged? Payment of wages and salary, supply of services to the government or embassies of other countries, electricity and water bills, educational services, health services, traveling expenses, and interest. So these are the cases where GST is not going to be charged. So these information keep in your mind while you are recording the transaction. Now next point is how another information is, however, in certain cases, GST paid cannot be set off against GST collected. In such cases, GST paid on purchase of goods and services is a cost for the purchaser. Following are the cases where GST paid on purchase of goods and services cannot be set off against GST collected. These are the cases where GST paid is not treated as an asset because you cannot recover them. So, what are those things? Goods and beverage, goods and food and beverages expenses at a restaurant bill, payment for health insurance, payment of membership fee of a club, health and fitness center, repair and maintenance of building, purchase of vehicle, free gift to staff, and payment for goods and services for personal use. Right. So these are the items in which GST paid cannot be set off against GST collected. So they are, while you are making payment of GST, you will not that become cost or expenses for you. You will not debit the input GST. Now there are some accounting journal entries. First, I'm taking about the journal entries when there is a intra-state transaction. Intra-state transaction means sales within the state. So for the purchase of goods, when you are purchasing goods, so if you are purchasing for cash, then purchase account, you simple journal entry, you know it very well. So if you are purchasing goods, so purchase account as an expense, it should be debited, and the same time whatever the GST you are making payment for intra-state or within the state, CGST and SGST will be charged. So you are making payment of input CGST and input SGST. That is an asset for the business, so it should be debited. And if you are making in payment through check, then bank account will be created. If you are not making payment, then creditor account / creditor is written, means if you are not, if that purchase is credit purchase, then creditor account will be credited, right? For sale of goods, for sale of goods for sale of goods, if you are selling goods on credit, then debtor account is representing the customer who is the receiver of goods. So if you are selling goods on credit, then debtor account will be debited. If you are selling for cash and you have received cash check, then bank account will be debited, and if you are receiving in cash, definitely cash account will be debited. Sales account will be created, it is an income for the business, and the same time whatever the CGST and SGST you are collecting at the time of sale of goods, they are liability for the business, so increase in liability should be credited. So output CGST and SGST account should be credited. Now purchase return, goods which you have purchased here, suppose sum of goods you are returning. So whom you are returning? That is creditor. Liability towards creditor will be decreasing, so it will be debited. Modern rule, decrease in liability should be debited, so creditor is decreasing. Earlier he was creditor, now you are returning goods to him, so liability towards creditor is decreasing, so creditor account will be debited. Purchase return, purchase was expense, now purchase return, you know, it's a decrease in expense. Decrease in expense should be credited. And this asset, input CGST and SGST, input CGST and SGST at the time of purchase. At the time of purchase return, they will be reversed, means credited. In other words, if for understanding, earlier they were an asset. Out of those goods which are purchase return, to that extent, GST, input GST will be credited, means assets are decreased. So that's why it is credited. Right? They have given you explanation here. In case of purchase return, input CGST account and input SGST account are credited because at the time of purchase, input CGST account and input SGST account were debited. I have clarified you better that earlier it was an asset, now at the time of purchase return it is decreasing, that's why it is credited. Right? So sales return. Now next journal entry is sales return. Sales return, at the time of sale you have collected these output CGST and SGST. At the time of sales return, sales return is a sales is an income. Sales return is a decrease in income. Decrease in income should be debited. And the same time, earlier these were the liabilities. Output CGST and SGST are liabilities. So the amount of goods which you are returning, which the customer has returned to you. Sales return is a goods returned by the customer. So the customer who is returning to you is for that extent your liabilities decrease, so decrease in liability should be debited. Output CGST account, output SGST account is debited. And the same time he was debt. Suppose that debtor is a customer was a debtor. He is the earlier he has to pay that full amount. Now if he is returning goods for that extent of goods, he will not pay you any money for that. The asset, debtor as an asset, it is decreasing, so it should be credited. Now next is purchase of fixed asset. If you are purchasing fixed asset is increasing in your business, so fixed asset account is debited. And the same time, whatever the GST you are making payment, input CGST and input SGST will be debited, and you are making payment through check, so it will be credited. Asset is decreasing, so bank balance is decreasing, so it should be credited. For expenses account, increase in expenses should be debited. And the same time, whatever the info GST is you are making payment, because it is a within the state, so input CGST account will be debited, SGST account is debited. Why it is debited? Because it is a asset for the business and it is increasing in the business, that's why it is credited. Bank account is credited because when you are making payment, means bank balance is decreasing. You can also write cash account if you are making payment in cash. And the same time, if you are not making payment at all, for that outstanding expenses account will be credited. We have discussed earlier, if expenses are not paid, so they are outstanding, so instead of two bank you will credit the outstanding expenses account. For income, suppose you are receiving commission. For income, you are receiving in check, so bank balance is increasing. Bank, modern, under modern rule, it is an asset. Increase in asset should be debited. Income, commission received is an income. Increase in income should be credited. And the same time, whatever at the time of receiving income, whatever the CGST and SGST has been collected, that will be liability for you. So increase in liability should be credited. Now, for goods withdrawn by proprietor for personal use, drawings. Drawings. If drawings, drawings is nothing but the decrease in capital. Decrease in capital should be debited. And he is withdrawing goods, so purchase account will be credited because purchase is an expense. It is decreasing, so it is credited. And the same time, input GST involved at the time of purchase will be credited to cancel, or you can say decrease in asset. That's why it is credited. The same way, goods lost by fire, lost by theft, goods given as a charity, goods distributed as a free sample, for all that, these are expenses for the business. Increase in expenses or losses should be debited. That's why these accounts are debited. It's a compound. If they would be given in the question individually, so you will pass the individual journal entry. For conceptual purpose, they have combined it here. So these are the losses. That's why it is increase in losses or expenses will be debited. And the same time, purchase account, decrease in expenses should be credited, and input CGST or SGST will be credited because decrease in asset, right? Next is for setting off input CGST against output CGST. Input CGST is showing debit balance, right? So because we have debited at the time of payment, and output CGST is showing credit balance, right? So while we are setting off each other against each other, means we are canceling the input CGST against the output CGST. For that, we will pass the journal entry output CGST, and output CGST is showing credit balance to setting off against the input CGST. Input CGST will set off against output CST. For that, output CGST will be debited here, and input CGST will be credited. For setting off, journal entry will be output CGST account debited to input CGST. Now for SGST, the same, only the term is changed. Outputs SGST account debited to input SGST. And for the payment of GST, means after setting off input CGST or SGST, whatever the amount left, whatever the balance left in output CGST and SGST will be paid to the government. So output CGST is a liability for the business. Now it is decreasing, so it should be debited, and bank balances decrease, you are making payment. So this is all about conceptual clarity. I am taking one illustration 1, and this is we are assuming that all the transaction take place within the state. So the question says, pass entries in the books of account